It's the morning of Saturday the 27th in Thailand as I speak to you. So the markets have just shut on Friday and I'm looking at a monthly chart of the dollar index. Okay, this week was confusing. I don't mind admitting it. We had a really good start to January and this week was much trickier. So, dollar index has now retraced 50% of its gains from, let me see if I scrunch this chart up. So this was the low down here in 2011, in May 2011, and we peaked up here at 103.65 in December 2016. Now, we spent all of last year going down, and you can see that this month we've tested the 200-month moving average and the 50% fib. So the question is that strong enough support to turn the market around and resume the longer term bull trend? It quite possibly is. We've already bounced off there, as you can see, on Friday, and we've got quite a long wick on this candle, so there are obviously some decent buyers coming in, but that isn't enough confirmation for me. Anyway, so at the moment it's a question mark. Have we bottomed? We need some confirmation. Got to be careful when you draw trend lines. Sometimes you can draw trend lines just to fit what you want to see, but I do think this is a legitimate trend line that I've drawn here. It kind of fits in with this trend line up here in a channel, slightly narrowing channel, but there is some confirmation there that the fact we've held this trend line as well. So I did wonder if we bottomed in the dollar index when we hit these trend lines here, and we didn't. We did pause, admittedly, but we didn't actually hold it. We broke lower. So I'm wondering now if this will be the level that will hold it. We will see. Okay, so now I'm going to have a look at some of the other pairs and see what other evidence there is. This is the euro versus the US dollar on a monthly chart. We have risen nicely to the 38.2% fib at 125.16. In the shorter term, we've got a 61.8 fib at 126.01. We topped out at 25.36, so pretty much held that spot on. 20 pips is not a lot on the grand scale of things. We've tested the 200-week moving average. We have topped out just below the 100-week moving average. I'm sorry, this is a monthly chart. So that's the 200-month moving average, the 100-month moving average. So this is all very significant. There is a lot going on in this area. We seem to have rejected it. We are overbought. Looking on the daily chart, we also have this big negative candle here, the spike up to 125.36. The lower close, the long upper wick, and again we've got a similar candle here from Friday, long upper wick. We topped at 124.93. So sellers are definitely coming in at these higher levels. This is a good reason to favour a bottoming out of the dollar, a topping out in the euro, and for this market to sell off. The New Zealand dollar argument is a little bit weaker. We've tested the 500-week moving average and we've certainly rejected that. We are overbought. On the daily chart, we've got this big, again, another even more impressive negative candle, really, with this big upper wick, and the second one on Thursday. Yesterday, a bit of a recovery, but nothing convincing. So again, good evidence to point to the fact that we need at least a decent correction. Very overbought. Stochastics just starting to turn lower, which is also a negative. Gold against the US dollar has hit a very important longer-term trend line. This trend line goes all the way back to 2014, March 2014. So we're talking about a trend line that's almost 4 years old. You can see how we just kissed that trend line, which was only just below the 38.2% Fibonacci, which is another resistance up there around 1380, and we've backed off significantly. So it looks like that trend line has held at the moment in severely overbought conditions. As you can see from the stochastic here, it's just starting to turn negative. We've got this huge negative candle here, not such a long upper wick, but a big red body. Really didn't do much to recover on Friday. In fact, we had an inside day, so that isn't particularly positive either. So gold certainly looks like it has topped. Gold would need to get well through 1380 before I turned bullish again. This is silver, again another big red candle there, negative. And if we look at the weekly chart, we've got all sorts of resistance here. Well, we've got this trend line which we've rejected. We've got the 100-week moving average and the 200-week moving average, which admittedly we are above. So this isn't quite so strong in terms of a sell signal, but it would be interesting if we can't get back up through 1750 next week, then and when we start moving back below these moving averages, that would be a negative. British pound has had a great run against the US dollar, real good recovery now for well over a year. As you can see, we've traced 50% of the losses from the peak up here in 2014. So a real good performance. We've hit the 50% fib and we've topped almost exactly there. What was it at? 143.44. So that's just 25 pips or so above, 3 pips above the 143.21 level. You can see the 200-week moving average here as well, which is important. So there's a lot going on, some decent resistance there. It does look like the pound has topped. And when you look at the daily chart, again, we've got this big red candle for confirmation. So very overbought. This needs a correction. And we've got the inside day after the big red candle, which doesn't help bulls either. So yeah, again, this looks like it has topped. Lots of evidence to show that the dollar can turn around next week. Okay, so this is the dollar yen. Now this doesn't look like the dollar is turning around against the yen. Broken a big red candle on the weekly chart, not really seeing any support. And on Friday, we actually made a new low. Now I wasn't convinced of this anyway. I did have that selling opportunity at 109.60, 70, and that did work really, really well. So if you managed to sell on that bounce, that was pretty good. And if you ran it all the way down here, you did really well. Of course, there was over 100, it was about 150 pips or something, 130 pips profit. And for some reason, I didn't feel bullish about the dollar yen on Friday, so I'm kind of pleased with that one. But yeah, certainly that does look negative. Australian dollar a bit more confusing against the US dollar. This was the red candle that we saw on so many of the other pairs on Thursday, but Friday we've got this big blue candle which totally negates this, and a push higher to test this high up in September, 81.24. We got to 81.35. Wasn't quite sustained because we did certainly pull back. Now the big question is, if I move this chart in a bit as well, you can see we've got a short-term 50% fib at 81.64. We've got this trend line going back about 2 years here as well. So there is some resistance. The question is, do we hold this trend line, which is sort of around the 81.30 area, just fractionally above where we got to actually, 81.35. So call it 81.40. It's about halfway between this line, which I actually don't need anymore, so let me take that off. It's just confusing. There we go, a bit clearer. So yeah, it's just below the 50%, and we've got this trend on here. The question is, do we turn around, and will the dollar then push the Aussie low? We are very overbought here, but it's just this big blue candle on Friday that's confused me. Okay, the third one is the Canadian dollar. This is the other one that is not showing the US dollar likely to turn. Now, we did get this bullish blue candle on Thursday, but for some reason I didn't buy into that, and I stayed negative. I remained negative of the dollar versus the Canadian. I don't know why. A bit like the Japanese yen. I don't know why I did, but anyway, there you go. So we got this red candle on Friday. We didn't retest the Thursday low, but this just doesn't look very positive to me. It looks like we can't get back above this trend line, and this does look weak. So maybe the Canadian can continue to strengthen. Maybe the yen can continue to strengthen. The Aussie dollar is a bit of a question mark, but the other pairs that I've showed you do indicate that the dollar can turn around, or at least stabilise next week. Right, this is the E-mini S&P, and this is troubling me. We have deviated a very long way from the moving averages, really long way from the 100 and 200 week moving averages. This move has just accelerated. There's almost a panic buying scenario in the E-mini S&P. This is the weekly chart. Now we'll look at the monthly chart. And just look at how since, here we go, where is this? 2009. Okay, so this is the whole of the rally since the global financial crisis. We're just accelerating here on the upside. Now, this monthly chart, this shows the first month of this year. So this is January, and we've rallied 2,000 points already, and it's not even at the end of the month. This is obviously the biggest candle that you can see on this chart, really, as far as the biggest blue candle. I mean, it's crazy. There is a panic buying scenario in the stock market this month, and we're already 1, 2, 3, 4, 5, 6, 7, 8, 9. We're in the 10th month of a straight rally, and even really this was just a pause. So you could say 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 16 months pretty much straight run. It's pretty scary. Now here's the yearly chart. In 2016 we managed to rally 475 points. Last year we managed to rally, what's that? That's 460 points. A great year. This year, bearing in mind, we're only about 3.5 weeks into it, we've already rallied 200 points. It's just crazy. This is just getting out of control now, and it's frightening when a market goes parabolic like this, because it's not sustainable, and eventually the market turns around and crashes. So I'm very worried about this. There's no way you can sell into this move, because this could go up another 200 points, next week. Who knows? There's no way to predict when the top is in, but when it does come in, the risk of a violent reversal, wiping out all those strong gains in an even shorter time period, is there. So be very, very careful. If you're holding this, don't get complacent and just think this stock market never goes down. It will go down eventually, and this is worrying. The speed of this move is just way too much.